Welcome to Biztech's Jobs and Careers Show, where we discuss key issues and topics related to jobs and careers across the Asia-Pacific region. Today, we speak to Shashwika Ravishankar, Principal at Heidrick Struggles Singapore office and a member of the private equity practice in Asia-Pacific and the Global Technology and Services practice. Now, Sash, welcome to the show.
Hi, Brian. Thank you for having me.
Now, could we start by you giving us an overview of Heidrick Struggles?
Yeah, absolutely. So Heidrick Struggles is a global consulting firm, and we help our clients solve leadership problems. So the scope of what we do really ranges from executive search to succession planning to top team effectiveness, culture shaping, or design. We have a global team of consultants across the world that really work with clients across sector. Our clients range from the Fortune 500 to private equity firms, family-owned businesses, as well as high-growth startups. Within our PE and VC practice, we really work with clients both at fund level as well as at asset level or portfolio level.
Okay, I want to start by talking to you about your Asia-Pacific PE compensation survey that you just did. What are the main takeaways? And let's start from there. From the survey that you did.
Yeah, and maybe just to give you a little bit of context, Brian, before we jump into that, we typically run an annual compensation survey aimed at investment professionals, and we've done this every year for the last 5 years. Our objective really is to provide the industry with a comprehensive, up-to-date analysis around the trends shaping compensation, really across the region, across different markets, but also across levels as well. And this is really at an interesting time where private equity really grows and matures as an asset in the region. I think this year's survey also comes at an interesting time where dry powder and deal flow globally is at an all-time high. And the region really emerges and grapples with the pandemic and gets used to this sort of new way of working. So what we did was we conducted the survey a couple of months ago over the summer, and we had 192 respondents across asset classes in the region. So we looked at buyout, growth, real estate, special sits, fund of funds, and VCs, and we really looked across markets in the region. I think in terms of what we found and really key findings, certainly really strong market sentiment across the region, right? So I think India and China really leading the way in terms of market sentiment, followed quite closely by Korea, Japan, Australia. And I think in each of these sort of large single markets, we've had about 70% of respondents saying that the market sentiment this year is either much better or somewhat better than what it was last year. Southeast Asia is probably trailing behind a little bit and probably a little bit more caution in these markets, primarily because of the nature of the region with multiple markets, with travel being challenging. I think deal sourcing has been complex. So I think certainly strong market sentiment, but largely led by India and China. Within asset classes, really not surprising to see that real assets, so infrastructure, real estate, but also special sits and credit in these markets have done well. Buyouts are still somewhat uncertain. But I think overall, in terms of what we've seen as a search firm, hiring has been robust. But all of that hiring is really driven by a diversification play that's been, that a lot of funds are going through, right? So we've seen global funds really building out new investment strategies in Asia, whether that's impact, whether that's TMT growth, whether that's infrastructure. And really compensation has been in an upward trajectory because the demand, if you like, from these new platform builds has been a lot higher than incremental hiring within buyout. So overall, I think the market has really shown positive sentiment, and I think certainly bounced back from the depths of the pandemic 12 months ago.
Now, Sash, I think one of the key things you brought up is the amount of the dry powder that is available in markets. Is that a function of the fact that a lot of funds couldn't do a lot of investing because of all the restrictions that were in place? That was probably one reason. The other reason, probably caution as well. And then now that sentiment is improved, they want to deploy the dry powder.
Yeah, that, and I think also public markets have been at a record high, right? So if you look at LPs, they're really sort of pumping a lot of money into private capital. So I think fundraising as well globally has been quite strong. So on the one hand, it is the lack of deal flow in the last 12 months, but on the other hand, I think it's also really the ability or the demand, I would say, on the part of LPs to put money into private capital.
And so the funds raising new money as well, and starting up new funds, that's then driving that uptake, not only in compensation, but also in terms of hiring.
Yeah.
And
I think we've seen sort of intra-regional differences in that sense as well, right? So I'm not trying to say that this is something that's uniform across Asia Pac, but we've also seen differences in the region. So I mean, in China, as an example, there was a strong rebound from COVID last year, but I think global funds are now adopting a bit of a wait and see approach over the next 12 months. In India, the geo effect has had a really strong impact on market sentiment. So we're seeing a lot of money going into technology in particular. So consumer tech, technology services, but also healthcare in India, I think, has been a bright spot. And Southeast Asia, interestingly, has also been driven by tech, but I think it would be interesting to see the exits and the IPOs that are imminent, and I think those would really serve as bellwethers for future deals.
And how about demand for asset management professionals? Because there have been a lot of acquisitions in terms of logistics and warehouses and so forth.
Yeah. No, I'm glad that you brought that up, because I think e-commerce has certainly been fueling this boom and this appetite for warehouses, fulfillment, logistics around the region, but also other forms of hard assets or heavy assets, right? So you've also got the hyperscale demand for data centers, as an example, and that's been an asset class where we've seen incredible growth, and we've seen a lot of real estate funds really start to go deep into data centers as an asset class. But overall, I think within digital infrastructure, whether it's 5G, telco, towers, broadband, I think there's really a lot of demand for heavy assets in this cycle. But I also do want to touch upon technology as a sector where we've seen a lot of growth, right? I think we've seen a lot of PE funds and VC funds really capitalizing both on the disruptive power of technology, but also the influence that technology has on the broader structural trends that have been in play pre-pandemic and that have been accelerated as a result of it. So we're seeing a lot of capital go into sectors like the future of consumption, the future of education, aging populations, the digital economy, the financial ecosystem. So a lot of funds going into ed tech, health tech, fintech, ag tech. So I think as sectors, these sort of long-term structural themes that are influenced by technology, I think that's really been the other area in terms of asset classes and sectors where we've seen a lot of demand. And I think the final piece is also around impact investing and the whole notion of ESG and the demand on the part of LPs to actually see either dedicated impact funds or actually see an impact angle to the investments that PE funds are looking at. So I think impact investing as a trend and theme has really started to pick up as well.
Okay, I want to zoom in on a couple of things. One of the things is, as PE and VC funds have invested in, whether it's cloud or big data and the technologies of tomorrow, so Industry 4.0, one of the things they've done is beyond the traditional VC, say finance buyers professional. They've been hiring much more functional technical capability.
Yes.
Tell us about that.
Yeah, no, I'm glad that you brought that up, Brian, because I think as we look to the future and as funds, as PE funds and VC funds continue to raise capital, I think we're seeing a lot more of a demand in these sort of sector-focused funds, if you like. And as you look at platform builds in these new sort of tech domains, it's not just about getting the financial engineering right. It's really about hiring people who have the depth in science and technology to really help you see opportunities as they arise, right? So I think that probably the theme to watch in private equity for next year and for years to come is really an inflow of talent from outside of the industry into these specialized funds as these guys look to really grapple with and go deep into some of these sectors.
And how about you mentioned ESG, right? Is there the talent to actually fill the pipeline that is necessary to fuel this growth?
Yeah. And you have to, and this is the other bit, because we've had to think quite laterally about talent and expansively about talent when hiring for these roles. I mean, if you were to think about, for an investment professional, if you were to sort of think about, hiring someone in the impact space, it's unlikely that you're going to find someone who has a track record of 5 or 6 deals under his or her belt in the impact investing space. So I think we've had to think laterally around talent and around sort of some of these new platform builds. And the fact of the matter is that talent is in short supply, and folks with a track record, they're few and far between.
Now, one of the things is whenever you have a mismatch of demand and supply, you have obviously then escalation in terms of compensation. Is that happening across the region?
Yes, I mean, I think compensation is a key driver in any career decision, right? And I think we've certainly seen an uptick in the numbers, whether it's cash compensation or indeed in terms of carry as well. With, I guess, Asia-specific funds that have also been raised over the last few years, I think we're seeing some of these firms really sort of think differently about the structure of compensation. But I think there are other elements in play when you think about that mismatch in demand and supply, and in that decision that folks who are highly sought after, and that sort of decision matrix of what is it going to take for me to join or for me to sort of make a move. And I think it's really around these broader notions around either building a new platform. I think that's always attractive to investors looking to make a career move. Or how does the firm enable me, right? What does the IC process look like? What is the commitment that a global fund has to the region? What is the broader sort of support network in terms of operating partners and sector advisors that are going to help me, if you like, go out and deploy capital? So I think while compensation is a key part of any decision, but I do think that with where the market is at the moment, there are these other factors that are equally important as folks think about making that move.
Now, with the shortage of talent, are firms then investing in their people and growing their own timber?
Yeah, no, absolutely. And I think firms have had to really focus on, really sort of building people from within. So I think we're seeing a lot more of that. We're seeing in terms of particularly within sort of, core buyout as an example, firms have really started to invest in sort of building that pipeline from within. I think where we're really seeing a lot of external hiring is the new platform build, the new investment strategy play, where we're seeing a lot of demand for external hires. But I think PE firms have certainly started to think about really sort of pipeline building and talent building from within. It's a key priority, and it's certainly top of mind for the clients that we work with.
Sash, one of the big challenges in terms of HR in Asia is retention. Because people move. I mean, in Singapore, it's common to make your moves every 2 or 3 years within the financial services space. How is that impacting the PE VC space?
Yeah, we're not seeing as much of that within PE and VC. I would say I don't think that retention as such is really. I mean, we're not seeing jumpiness in terms of profiles and people sort of moving around every 2 or 3 years. I think I've seen less of that within within investment professionals. But we've certainly seen that as part of the broader ecosystem, right? As PE and VC money goes into tech, we're seeing unicorns that are minted and that are born, every day. These guys really see growth as being a key part of what they need to do to survive. So I think they've really been investing hugely in areas like product and engineering. So we're certainly seeing a shortage of skill sets, if you like, within the broader talent ecosystem, and we're seeing a lot of moves happening within sort of unicorns or within the startup ecosystem. But I think as you look at sort of PE and VC funds, we're not seeing as much of that sort of 2-year play.
And now, looking ahead with your crystal ball, what do you see the opportunities are in the APAC PE industry in 2022? Where are the opportunities? Where are your clients, specifically hiring?
Yeah, I think there's 3 broad areas where I see a lot of opportunity, right? I think the one bit we did touch upon was the diversification play and the creation of new platforms. I think the second piece is really the role of the operating partner, and this one doesn't get talked about as often, but I think the role of the operating partner is becoming really critical in this new environment. With dry powder being where it is and with increased competition for deals, valuations have really gone up. And I feel like value creation is really no longer just a clever financial engineering game, but I think firms have really started to roll their sleeves up, get into the operational nuances, become a lot more operationally hands-on with their portfolio companies. And they've really had to think laterally and creatively on how to leverage their existing portfolio as well to think about value creation. So I think the role of the operating partner is really critical in this new environment. And within that context, I think firms are really looking at specialized skill sets within operating partners, whether it's folks that understand technology, can come in and help drive digital transformation, or whether it's even sort of digital ecosystem building and sort of carve outs both within portfolio companies, but also across the portfolio. I think that role of the operating partner is going to be really critical over the next few years. And I think the final bit is really around a lot of these deep tech funds, or these hyper specialized funds in AI and health tech and ag tech. And I think that's where we're going to see talent from outside of the industry. It's not just about hiring investment professionals, but it's really also about getting the broader bit around the science, the innovation, the technology, right? And so I think that's going to be a really an important space to watch as these platforms start to pop up in the future.
Sash, there's a couple of key takeaways from you. I think one of the key things is the fact that investment professionals will no longer only be in funds. It's going to be a lot more operational professionals and technically specialized and skilled professionals. I think that's a big thing. The second takeaway for somebody listening from this to this conversation is, if they're a senior person in a tech company and they've always wanted to join a private equity firm, this is probably a very good time to do that and explore different career opportunities.
Yeah. And I think for a lot of these operating partners, right, I think the operating partner role is really a stepping stone into something else. And a lot of these guys really see it as a stepping stone into an operating role or a leadership role or a C-suite role in the future. And for those guys, it's really about how empowered am I going to be in that role in order to really, roll up my sleeves and make an impact on some of these assets. But also, what network does it give me as I come out of this in a few years? So I do see that role as being a critical one as firms look to deploy the capital that they've raised, but also return money to investors, which is equally important.
Now, it's been a very interesting conversation, Sash. But before we leave, any final thoughts from you?
No, I think we've covered it, Brian. But I think really Asia Pac is a very exciting space for private equity. I think the shortage of talent, of good talent, is acute, and it would be interesting to see how the industry evolves over the coming years.
Sash, thank you very much for taking your time to be on the show.
Thank you. Thanks for having me, Brian.
I'm Brian Fernandez, and I've been speaking to Shashwika Ravishankar, principal at Heidrick Struggles Singapore office, and a member of the private equity practice in Asia Pacific, as well as the global technology and services practice. On Biztech, Jobs and Careers Show. This video will be on our various platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.